Hello, everybody, and welcome to the 23rd episode of the Oreninc podcast series. I'm joined here in Vancouver by Mickey Fulp, the Mercenary Geologist. Mickey, thanks for making the time this morning.
Thanks a lot.
We haven't spoken in 4 weeks, and it feels like we haven't missed a whole lot. And as always, I'm going to start us off quickly talking about the Oreninc Index and what we've seen here in recent weeks in terms of financings and junior market, let's call it developments or non-developments. And we're going to talk later about oil price, but also geopolitical events that have influenced the price of the precious metals and mostly the oil price right now. So quickly speaking about the Oreninc Index, actually, we're going to publish our index later today, probably tomorrow, and we're looking at a very low number again, just 25 points this week. There's no big financing. The only one I've seen that was somewhat bigger was West African Resources announcing a $34 million placement. So if you take that out, I think we're down to $20 million, $25 million max this past week in total dollars announced, despite this should being actually one more of the active weeks, despite the saying of sell in May and go away. In our sector, May is usually a little more busy before the summer. It doesn't have me, too positive about what's going to happen over the summer. August, I just ran the numbers actually here for the Cambridge House conference where I will be presenting, and August last year was very dead. We've only seen like $100 million in financings, 110 if I'm not mistaken, and I think this year we're going to beat that even. One reason for the slow or the slowdown is flow-through financings. We don't see a lot of flow-through money. I know, Mickey, you're not very keen on flow-through, but that has sort of diminished or disappeared to a degree. We've seen a very active December, and so far our index is really driven by only larger financings. Despite money being available, we've talked about this over breakfast here this morning, smaller financings or good projects, good financings are still being oversubscribed, so there is money. I've been saying that on numerous occasions before, and there is money available. People made money in 2016 and the early parts of 2017. That money is waiting. And one thing I hear and see as well, like with the Oreninc Mining Deal Club, there are no new financings or no new opportunities and no new deals. So 2016 saw a lot of new groups and companies come back to life. A lot of old CEOs that were retired for a couple of years decided to come back, start new companies. We're not seeing any of this right now, at least. And Mickey and I will be attending the Cambridge House conference here in the next couple of days, and I'm really curious to see whether there's going to be a new deal, a new financing, a new opportunity present. So, Mickey, I've talked a lot this morning. Let's talk about the geopolitical events. That was the only real thing that happened, or the only real events that happened in the last 4 weeks that some sort had an impact on the markets from our perspective.
So, the great negotiator, Donald J. Trump, appears to have made significant progress with the North Koreans. So we've removed that cloud of geopolitical risk from the market. We expected him to crater the Iran deal, at least for Americans, and that was done. But the market really didn't react except on the oil and gas end of the business. Certainly the gold market did not react to that. We've continued to see gold range bound from not even 1300. It can't even test that lower resistance, and it cannot test upper resistance at 1360. So for quite some time now, we have been range bound between, say, 1305 and 1355. It's a bit curious to me that geopolitical events do not seem to have much impact on the price of gold. The thing that does have impact on the price of gold this entire year is the U.S. dollar. When the U.S. dollar goes up, the dollar goes down, and vice versa. U.S. dollar has strengthened considerably over the last month. In fact, it's up over 3 points over the last month, and I don't think that is so much to do with the strength of the U.S. dollar as the relative strength of the euro. and the euro, which comprises 57% of DXY, has gone down, down, and down, basically because of weakness in European economies, specifically German economy. So the only thing that has reacted is oil, and oil has touched $71. It's trading just below that this morning. We haven't seen those prices in oil and gas. We're talking WTI. Brent's trading $6 to $7 above that. We haven't seen those prices since November of 2014, which was the middle of the oil crash.
Yeah, and it made my gas actually in Germany is like I think we're up 30% at the pump right now. I think earlier this year I paid 105 in euros per liter, which is in Canadian dollars like $1.65 per liter in diesel, and I think it's a euro 32 now.
Yeah, and so in Canada, which we are right now, I noticed is coming from the airport a couple of days ago, it's about $1.60 a liter here Canadian, and the Canadian oil patch is in a world of hurt. U.S. oil patch is booming. We're now last week at 10.7 million barrels a day. You add in condensates and natural gas liquids, of which we produce a much larger amount than any other country in the world. We are by far the world's largest oil producer now.
And an exporter. A few years ago, you were a net importer. Now you're actually
Right,
an
and that
exporter.
was a political event that allowed us to actually export directly oil that occurred at the end of the Obama administration. But yeah, the latest numbers I saw were up above 2.3 million barrels a day exported. China is now by far the world's largest importer of oil and gas. So
This is getting interesting.
it's all good in the U.S. oil patch. We'll have a little bit more to say about that when we talk about numbers, but the number of drill rigs drilling in the U.S. right now is last week 1,045, and that's up from a low of 404 in
Not too long ago.
mid 2015.
Yeah.
But we still got a long ways to go because we were well above 1,900 as late as 2014. So, but the U.S. oil patch is booming.
No, it definitely plays into the cards of Make America Great Again because that creates jobs, and one drill rig, just the economic input of one drill rig, I think, is enormous as well because drilling is not cheap.
No, it isn't.
One thing I actually forgot to mention earlier before when we talked about the agenda, I've noticed there's actually the stocks themselves. We talked about the metals, like the gold price, shown some relative strength, surprisingly. There's not a lot of volume in the markets, none whatsoever. But I've noticed a couple of stocks that I cover, like Atlantic Gold and Kirkland Gold, for example, they've been reaching all-time highs lately. Do you see any sense in that? Like, where's that coming from all of a sudden? Like, it's not like I see a lot of wait and see. Like,
Yeah, that's what
wait and see in general. Like a lot of companies are just waiting to put out drill results. I have a bunch of stocks. I'm waiting to see something, like for something to happen. Either drill results, a resource update, or something similar, or even corporate action. And but also like, we've seen, I think it was Balmoral that put out a terrible resource. Was it 3-4 weeks ago? Might have been actually before we done our last interview, and the market impatiently sold it off in a brutal fashion. So
Yeah, well, there's not a lot of interest in junior resource stocks. I think that has a lot to do with the flat and range-bound nature of gold. And it can't get above resistance. We've seen good drill results come out on a couple of companies in the last couple of weeks, and they don't move. The Toronto Venture Exchange Index is trading at the same levels on the index, which is the basket that we saw during tax loss season of last year.
Yeah.
The
Was
volumes,
it 50 million shares traded or something like that?
Yeah,
50 million
the
number
volumes
rings.
are 50 to 60 million
Yeah.
shares a day compared to the second week in January where the average was 175 million shares. So our volumes are off by 2/3. there's no interest in the market. Specific stocks will run up. It may have something to do with the people that hold those stocks who see news as liquidity events.
No.
It's a puzzling market right now.
And we discussed that briefly earlier before. Like, we don't see anything happening actually before Labor Day. Canadian Labor Day is September 7th, if I'm not mistaken. Correct me if I'm wrong. But
Same
it's gonna
as
be,
U.S.
Yeah,
So yeah,
it's going to be a slow summer.
Yeah, it's going to be a very slow summer. I think I'm giving a talk tomorrow at the Cambridge House Conference entitled "Will Gold Break Out? How, Why, and When?" And I am going to follow your line and say I don't see any catalysts on the horizon until after Labor Day, when people come back to work, and then we get into the seasonal high demand for gold, especially from India. But yeah, what's going to move gold? I really don't know. And the market, I would say, is not going to move. The junior markets or gold markets are not going to move until the price of gold goes up.
That's a good point. And actually, my title of the presentation on Tuesday is going to be called Black Friday Discounts All Summer Long.
You know we're competing. Are you aware of that?
Oh, I didn't.
You're in
No.
you're in workshop 1, I think, and I'm in workshop 2. So
I'll count.
Don't talk too loud. Okay?
I'll count heads just for comparison.
At the same time. So yeah, curious.
That's funny. Let's end our quick session here, our podcast here, with our number of the week. And why don't you start us off? I see you have a little cheat sheet here.
I always have a cheat sheet for my number. I referred previously to oil and gas rig counts in the U.S. at 1,045. Canada has 79 drill rigs as of Friday. That's down from a high of 342 3 months ago.
That is
Canada
sobering.
has lost roughly 260 drill rigs over the last 3 months. And to put this into perspective, my little state of New Mexico, well, it's not so little, but it's smaller than Alberta or BC, either one are. We have 89 drill rigs turning to the right at this present time. So the gist is the Canadian oil patch is in a big world of hurt, and personally I don't see an end to that, especially with all this Trans Mountain Pipeline controversy and Alberta threatening to cut
Was it
BC.
wine imports? Was it?
Well, it was a tit for tat sort of thing. Alberta's going to cut off gasoline shipments to BC, and BC's going to cut off wine and pigs to Alberta. So,
That's ridiculous.
yeah.
That is ridiculous. So my number of the week, and that's a number I've been hearing a lot as well. And we talked about potential triggers and catalysts, and I picked $1,400 as a number. And I think it's like talking to a lot of people over the recent weeks, doing a lot of traveling. People tell me, "Oh, gold's got to go over $1,400 to generate some interest in the market," and I'm calling BS to that. Because as long as the Dow and all the main markets, the S&P 500, are doing decently well, the mutual fund money is not going to move anywhere. The retirees in the US especially are not going to really allocate their funds regardless of the gold price. And if a mining company says that, you better run, because if you can't make the money at $1,320 today, you shouldn't be in the mining business, in my opinion. That's just my humble opinion to that.
Well, I agree with that idea that if you can't make money given the current gold price, you ought to get out of the mining business and sell your mine to someone who knows how to mine.
I hear oil business is booming in the US, so maybe you should go over there.
Absolutely booming.
Mickey, thank you so much. Good luck at the conference.
Same to you, Kai.
Have a great couple
let's
days.
hope we both pick a couple of good stocks for our subscribers.
That'd be fantastic. Take care.
Thank you.